Have you ever wondered how big IT companies like TCS, Infosys, HCL plan their finances, salaries, profits, and projects and still grow every year? The secret is a department called FP&A, Financial Planning and Analysis. In this video, I will explain what FP&A does and how they make financial decisions, budgets, forecast, profitability analysis, and how you can build a career in FP&A for IT companies. So, IT services are not just about code, they are about margins. It's all about the business. Business means it's a numbers game. Do you know FP&A analysis is a company like TCS or Infosys spends more time forecasting people than cash. We are diving people into financial engines of the IT world. The assets of the IT companies are the resources, the people working for the company. That is the reason in profit and loss account of IT companies, the major cost, 60 plus percentage of the cost they incur in profit and loss account is for the resources. So the biggest assets of the company are the people. So like manufacturing companies, which forecast inventory or raw material, IT FP&A primarily focus on human P&L and predicting the direct hiring needs, attrition rates, and resources utilization, and the cost of delivery, modeling, salary cost, training, and overheads per employee. That is the reason FP&A planning, forecasting, and budgeting is a very significant role under CFO profile. So FP&A basically there will be strategic planning, business modeling, and financial analysis, and risk management, and capex and project management, forecasting and scenarios, and financial negotiations, and external communications. This is the executive role where all decision making involved from time to time based on the realistic numbers. So what does FP&A? So it helps the companies in three main questions. One is earnings in the future. How much his company is going to earn in the near future, whether it is the quarterly revenue or it is for the yearly revenue, how the forecasting happens for the revenue. So this is the main analysis of key pointer under FP&A. Second one is how the company is spending the money, especially the cost and budgets. Whether we have the enough budget to spend the cost in order to acquire the business or spending more on existing projects. And will we make the profit or loss? The financial analysis completely depends upon whether it is worthy or not to say yes or no for the project. So the unique role of FP&A in IT sector is very critical because the money is the highest priority and decision making on money is the utmost priority. The key concepts, unlike like manufacturing companies, which is inventory forecast, raw material, etc., IT FP&A primarily focus on human P&L and is the biggest asset of the company. And in the P&L, it is the human salary cost and retirement costs are the very huge for the company. Predicting the hiring needs, attrition rates, and resources utilization and resources requirement on the bench. So this is very critical to run the project and deliver the outcomes to the customers. And cost of delivery, modeling the salary cost and training the resources and overhead cost per employee is very important in order to absorb the exact cost and give the pricing to the customers. At the same time, business partnering explains how FP&A acts as a strategic partner to finance teams, especially the sales team helping the set minimum bid prices and evaluating the proposal for profitability. In deals and pricing of the IT companies, the financial role is very, very critical, and the decision making on the cost and margin parameters is very at high level. Delivery and project managers tracking the bound rate and staffing for a project's financial health, on-time projects, whether the projects are running, overrunning, or underrunning. Is there any overcosting they are expecting or any undercasting? How exactly the margins are deviating from the expectations? So these kind of analysis, time to time, day to day, they have to make it, and they have to observe the project status on realistic time. So then only the companies will deliver the exact requirement of margins to the stakeholders of the company. That all there in the hands of FP&A folks and the HR team. HR team always they interact and coordinate in terms of budget, annual increments, and hiring goals. This is very critical for the IT companies. Why FP&A is important in IT companies? Because finally, at the end of the day, it is a game of numbers. The numbers will be measured whether you are profit or loss, or you are gaining or you are losing. So the revenue is the highest priority of any company. So revenue forecasting on daily basis, weekly basis, and monthly basis, and quarterly basis, and annual basis. The quarterly publications of the company, the revenue increase and margin growth rate is very critical for the stakeholders. That is the reason predicts the future billing from clients and projects. Budgeting allocates money for the salary, software tools, and hiring, travel, and infrastructure. So the blood money is the blood of the company, and without blood circulation, company won't run. So similar way, cost control, uh, how much you have the money and how much you are spending, how much we can optimize the amount. Any cost saving of 1 rupee is equal to earning of 1 rupee in the corporate, and manages the salaries, bench cost, and IT expenses so that it will increase the margin impact. Profitability analysis checks the projects and clients are profitable or loss. Who are the highest costing resources in the project? How to shift the project to profitability and changing the on-site mix and role mix and including the lower cost resources in the project and moving the higher cost resources from the project and removing the on-site resources and moving them to offshore. This is all optimization. This helps the company to improve the margin profitability and decision-making support. Helps the CEOs, CFOs, and delivery heads take the financial decisions on realistic time, because all the decisions on financial matters need to be taken in order to make the company profitability. And so in the IT industry, the steps follow as follows. Collect the data, project revenue, salary cost, cloud and software expenses. This is the step one. Once you collect the data, you need to forecast the revenue for the quarter or for the month on existing contracts, new deals, and exchange rates. And budgeting. You need to assign the budgets for entire operations of the company, assign money to each department and HR, IT, training, operations, whether it is the direct revenue producers or indirect revenue producers. This need to be allocated to budgets and variance analysis. Compare how much you allocated. For example, for the IT department, you allocated 100 million for the year, but each quarter you have the budget of 25 million. Are you meeting the budget of 20 million, or you are under? You are only using the 20 million, or you are going beyond the budget? For example, you are going to spend 30 million. So these kind of variance analysis we need to timely analyze and report to the management. If there is any overcasting or requirement of the projects, The budget should be allocated on time. So this kind of decision need to be taken based on the analysis of variance between actuals and the forecast. And reporting, create the MIS reports and dashboards for the management for the realistic decisions, and gives the suggestions and recommendations like cost cutting, pricing changes, hiring freeze. So these kind of all the decisions in the company taken based on the FP&A MIS reporting to the management. So key IT and FP&A metrics and KPIs. And so in IT industry, especially utilization rate is very important, most critical. The percentage of billable hours to the total available hours of our resources shows a 1% change impact on the profit. Because the billing, the finally the revenue depends upon how much you are billing to the customer. Are you getting the cash resources on time? Is there any discounts involved in the billing? And all the tax complaints are met in the billing. So finally, at the end of the goal of service delivery is to get the amount from the customer. So this is very critical in terms of FP&A metrics and revenue per employee. For example, you are spending on the employee $100. Finally, you are able to recover only $80 from the employee. So there is a lack of more cost. The more cost you are spending and you are not able to recover the cost. So cost per employee we need to analyze always. And order book and deal pipeline, forecasting the future revenue by analyzing the pipeline of deals won, lost, or in negotiations. This is very critical for the management where we are exactly going and where we are going to stop the resources. So this kind of decision making for the management will be provided based on the FP&A reporting. So the three cost matrix which is going to impact at a higher level in the FP&A profile are gross margin, critical to services, and explains the revenue minus cost of delivery and salaries, and SG&A, which is all non-billable like marketing, overhead, selling and distribution. All these expenses will come under SG&A, which is not going to generate the direct revenue from the customer. And this kind of cost control and cost optimization, it will be taken care by analyzing the SG&A report provided by FP&A team. And EBITDA margins, the industry standards for the operating profitability, how much and where we are, whether we are under lower margin or higher margin or we are at the margin. These kind of analysis will be provided through FP&A. So the teams in the top IT companies, they mainly work on project level profitability analysis with the client brings more profit and which clients are more profitable, so that if it is not profitable, what are the maximum uh, alternatives we can adopt to maximize the customer profits. So this analysis is very important. The employee utilization and bench cost tracking. So the utilization of the resources and bench cost is the highest cost where the resources are not generating any revenue for the company and we are paying to them. So this zero bench concept, they have to bring it and make the resources at 100% utilization. That is where companies can make the margins at a higher level. And forex impact and revenue. So the exchange of the profits and hedging of exchange impacts are very important in order to protect the revenue of the company. And automation and cost saving initiatives are very critical in order to maintain year-on-year, quarter-on-quarter revenue and margins in the projects, and pricing support for new client proposals. This is one of the critical where finance plays in order to make the decisions whether the new proposal is viable or not, whether we are going at par or below the margins. So is it okay to go ahead or not? These kind of decisions all will be provided by the finance experts. So the finance experts role is very critical in the FP&A rule for management decision making. And FP&A role in top IT companies includes bid phase and should cost model, and also decisions like estimated staffing and resources required for the project, how much it cost, what are the salary cost, and what is the cost to the company, technology cost and overhead cost for entire resources estimation will be provided by only FP&A experts in the company. And project execution, tracking the actuals. For example, you submitted the project revenue 100 million per quarter, but the actual revenue you are getting only 95 million. There is a lack of 5 million in the project. So you need to analyze the reasons and analyze the gaps, and we need to provide how to fill the gaps and how to correct the variance analysis here. At the same time, if a senior resources leave and is replaced by two juniors, and FP&A analyze the cost impact and delivers the impact, how you can optimize the cost. So these are all numbers game provided by the FP&A team, the management, and forecasting and course correction, holding the forecast. So entire project falling behind, and FP&A forecast new completion dates, cost and deadlines, restaffing, negotiating at higher prices, cost cuttings, everything should be calculated by FP&A team in the company. And any kind of automation like platforms, Anaplan, Oracle, SAP, this is better for the real-time forecasting. This gives the significant on-time reports going forward. And FP&A is a strategy core for an IT company, and running operational data powers people projects into the financial outcomes. FP&A is a greater path for those with a mix of finance, data analysis, and business communication skills. This is the executive role where you need to interact with, collaborate with the multiple teams, and consistently work and make a decision collaboratively for better management, and it requires more analysis skills and expert knowledge as well. For example, suppose Infosys gets a 100 million project from US client, FP&A team tracks how many employees are required to deliver the project and what is the cost of these employees in India and at on-site, and dollar to rupee conversion rate how much, and tools and softwares of the project are how much is the direct expenses, how much for the indirect expenses. At the end of the day, what is the risks involved, whether all costs are factored in the pricing or not. If all are factored, then our revenue minus total cost is our profit. The profit margin is good, then approve. If no, then change the pricing or reduce the cost. These kind of all the suggestions to the management will be provided by financial planning and analysis expert in the company. So you know the realistic how the company runs and how the business runs in the company if you are part of FP&A role in the company. And you need specific skills like Excel and financial modeling, budgeting and forecasting, and understanding the P&L balance sheet and cash flow of the company. The basic knowledge of IT business model building, utilization, pricing, how the business teams, sales, delivery, and HR works together to bring to the same table the value addition. Tools like SAP, Oracle, Power BI, Tableau, it is added advantage to any person to be part of FP&A. Good communication with finance and delivery team. You should be a good communicator in order to deliver more works to the management. And the salary expectation and career growth in the positions. Initial phase, you can expect up to 8 lakhs per year. The senior analyst with experience, 12 lakhs per year. The FP&A manager, 20 lakhs per year. Director, head of the FP&A, 30 to 1 crore per year is the expectation. These are the numbers changes based on the subjectivity and experience and skill set and in the industry.